Good day, ladies and gentlemen. So today I want to teach you a very simple ICT model that you can decide to use as your personal strategy. For me, I think this is like the easiest ICT concept that you can actually apply to your trade. Okay, so if you haven't found a system that you can use to trade, you can apply this. It is not an 100% strategy. There's no strategy that is 100%. You understand? You just have to apply your risk management and what's it called, trade management and other aspects of trading, if you want to be a successful trader. Okay, so what's this strategy all about? The very first thing you want to see markets moving in a certain direction, and then it changes character. If it was moving up before, it start moving down. But that point where there is a market structure shift, you definitely would be expecting to see a break of structure. So look at this right here. You have a low right here that was broken aggressively by the set of red candles. Okay, so showing you that market wants to start moving downward. So once you have that, the next thing you want to see along that leg, that displacement leg, is a fair value gap. Okay, which we have right here between this and this. Okay, so you have a fair value gap right here. Okay, and you can see what happened. Price tapped into the fair value gap to give you a sell trade. Okay, so you just want to see price break structure aggressively in a certain direction, then you check for fair value gap along that price leg, then you wait for price to come back into that fair value gap, then you take your trade. Okay, so that's one system, that's one example rather. Now this is another example. You can see price displaced upwards. Price was moving down before from here. You took a sell trade around here, so price was moving in the bearish direction, and all of a sudden it broke this level aggressively. One issue you are going to have is to ensure that you're actually taking the trades where there's an aggressive break of structure. If the break of structure is kind of gradual and it lacks momentum, the fair value gap formed might not be excellent. You understand? It might work, it might not work, but it's a little bit low probability. The probability increases if the break of structure is aggressive. You see like back-to-back bullish candles or back-to-back bearish candles. You understand? So look at this now. Back-to-back bullish candles is what you have, showing you that the buying pressure is crazy right here, breaking the structure aggressively. So you do not have a lot of combination of small bullish candle, then you have some bearish candles in between, though it's still going upwards. That's not a serious displacement. Okay, so once you've seen that happen, you just need to do what? Look for your fair value gap. So we have a fair value gap right here, which I'm marking out. Okay, so this is our fair value gap within that boundary. So you wait for price to come back into that fair value gap, and this is structure that got broken. This structure was broken by these displacements. Okay, so price came back into the fair value gap, and what did we have? Aggressive move to the upside. So this is that's just the simple system. You wait for an aggressive break of structure, which signifies a market structure shift. Then you start searching for fair value gap. Let me quickly throw in lights when it comes to a little bit one other issue that you could possibly have, because I've used this as my trading model some time ago, so I know where the downsides are. Another downside is you could have markets break aggressively like this, but you could possibly have 2 to 3 fair value gaps. Now the issue is, when you have a situation like that, which fair value gap are you going to use? Okay, so when it happens like that, there are two schools of thoughts. When it happens like that, if you are a conservative trader, that you like being so careful, then if you're trying to buy, you have to buy at discounts. Meaning, for example, let's say you add another fair value gap here. Okay, so this fair value gap that you have here is lower. Okay, it's lower compared to this fair value gap here. in terms of level. So if you are looking to buy, the fair value gap that is lower is seen as being in the discount area. So if you are conservative, you want to wait for price to come back here, which could play out or could not play out. If it does not play out, fine, you still have your balance safe. But if it plays out, good. Okay, so that's for those that want to be conservative. You don't want to expose yourself to much risk, but in cases like that, it means price could leave you behind. Okay, but if you're an aggressive trader, more often than not, price will tap into your fair value gap. And as an aggressive trader, it means the closest fair value gap to current price action is where you're going to take your trade. Okay, the closest fair value gap to current price action, meaning if price has formed a fair value gap here, then it's moved up, it formed another fair value gap up here, then moved up. This one that is closer to the price action is the one you're going to take your trade on. Now, if you are that kind of trader that does that, you will have more trades than the conservative trader that is waiting for price to come to a discount area if he wants to buy. Okay, you are going to have more trades. But if it plays if it happens to be that market wants to come down to the discount level, then your stop loss is going to get hit. Okay, so it now left for you, the ball is now in your court to decide which one you are going to go for. But at the end of the day, whether you are conservative or you are aggressive, you are still, like, the result is still going to come back to the average, in the sense that since the aggressive trader has more trades, the losses he has will still be cancelled out by the number of wins he's going to have. You understand? While the conservative trader that takes less trades will not make much profit, so his own account balance too will not be so far apart in terms of value compared to that of the aggressive trader. To be sincere with you, the aggressive trader will make more. That's the truth, because that's the way I trade. I look for the price action, the fair value gap that is closer to price action. Most times that will get respected, put you into some pips of profit. I take my profit. If it wants to reverse and go to discounts, it can do that. It's none of my business. Okay, so basically that's what I have for you today. If you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.